Welcome to Future Focus, a financial strategies podcast where we make the complex simple. I'm joined here today by my colleagues from the Ameritas Advanced Planning, Keely Joe French and Jacob Messick. Keely Joe has a master's in public accountancy. We want to establish why even listen to us and this podcast. Keely Joe has a master's in public accountancy. She's also a recent graduate of law school, the University of Nebraska. Go Big Red. And she and Jacob, to my far right, Jacob, also a graduate of the University of Nebraska. He has his CFP. He's a certified financial planner. Also has his CLU and CHFC. Any more?
Oh, I think that's good. Nope, that covers it well.
Okay. So, like I said, I'm Troy Branch. I guess I have to give my initials as well. I'm a law school graduate, also of the University of Nebraska, Lincoln. Trying to think of what else. Oh, also have my CLU and CHFC. So we've spent a bunch of time in school and gathering initials, and hopefully this podcast, the idea behind this podcast is we want to try to make more like complex issues simple. That's our goal. That's what we try to do every day in our jobs. We try to take the complex things like the topic today, estate planning, and make it as simple as possible so people can understand how these concepts and ideas can affect them and help them and ultimately allow them to do many of the things that we read about and sort of dream about for our families and loved ones and so on and so forth. So that's the idea behind the podcast, taking the complex and making it simple. Would you guys describe it any differently?
No, I like it. I think, we have these conversations so much, while we're working. And so it's great to kind of share it in this format of what we see and what we hear and share all that knowledge that we've obtained over the years.
That's awesome. Joe?
I have nothing to add. You guys have it covered there.
Okay. So I'm going to go ahead and guess that'll be maybe the last time you have nothing to add.
I do talk a lot.
Yeah, well, that's all right. Don't worry about it. Okay, so we're going to talk estate planning, and like that means something to us, right? Like we hear those words, and when we have estate plan, like when we say estate planning, it means something to us. But that's our world, right? And we want to give people a peek inside of our world as we think about how it fits and how estate planning, in this case, estate planning fits with the regular person. So that's what we're going to try to do is to talk to regular people, non-advanced planning, law degree, CFP sort of people. That's what we're going to try to do. So I say that, and I'm going to ask this really weird first question. Okay. So imagine this. Imagine an alien comes down. They know nothing. Right? They know nothing, but they want to ask you about this thing called estate planning. How would you describe it?
I guess I'll take that one first since I'm the non-JD at the table here. I'll take a stab, see if you guys don't like what I say here and see if you agree with it. So, if I describe it, most people own something. They own stuff. And that stuff, we'll dive into it. It may be assets and property, and that we'll dive into that. But, generally speaking, most people own stuff. So estate planning is organizing what you own, that stuff you own, whatever it may be, organizing it, but then managing it in a way so that you distribute it to who you want, when you want, how you want, based off your wishes.
I just add to that just a little bit. So while it does deal with property as well, it also deals with things like your healthcare directives, your living will, your trust, things like that. So we need.
Can I interrupt?
What's up?
When you say healthcare directives, we're trying to make the complex simple.
Okay.
So
let me rewind.
So here's the thing. I'm gonna for the audience, right? We're gonna talk like we do a lot of jargon, right?
Yeah.
So we have acronyms and acronyms on top of it. Like just look at our credentials, CLU, CH, like we have all those things. So we're going to try to, again, make the complex simple. So when you say healthcare directives, like what does that mean to the average person?
So healthcare directives are essentially what you want to happen when you can no longer make the decisions for yourself. Whether that's like the pull the plug question, I think, is the greatest example of that. What do you want to happen when you can no longer when you're brain dead essentially, but your body is still there and we can maintain it with machines. What do you want to happen when you can no longer actually make decisions for yourself outside of that? For example, like, do you want somebody to be talking to your doctor for you? Are you okay with certain medications? Maybe you have a certain preference on how you want to be taken care of. In addition to healthcare directives, we also have like just taking care of your loved ones, making sure that they are provided for and that they know exactly what you wanted to happen at the end of the day. Because if they're left guessing, there's a good chance that they're probably going to fight about it. I mean, you put money in the middle of strangers, you put money in the middle of friends and family, they're going to fight about it. So it's better to just take that off the table by going, hey, this is what I wanted to do. But you can only do that really with estate planning. It covers pretty much any part of your life.
Is it?
Yeah. So I was going to say, so it's pretty much as you own items, stuff, property, assets, but then also have people you care about, dependents, family members, organizations, things that you care about. It's the combination of all that.
Oh, yeah.
And planning so that your wishes are addressed, whether you're living or deceased.
Mm-hmm.
And I know I asked the question, but I also like, what's the feeling of having the discussions? Like, what is those discussions? Like, when should you have those discussions? Have you guys thought about?
Absolutely. So I always say that for estate planning, if you're above the age of 18 and you have assets of any kind, you need to be having a discussion about your estate plan, regardless of how much it is. It doesn't have to be millions of dollars of things. If you have like a car or a house, you have something that you want to happen with that when you're gone. You need to have an estate plan put in place. You never know what can happen in your life. You could be hit by a car tomorrow and completely disabled. What do you want to happen then? You don't want to leave that in somebody else's hands to decide for you.
Right.
Yeah, no, I agree. So addressing it, I mean, if you didn't address it yesterday, today's the next best time to address it. So, it's addressing it while you're living, addressing it now, but then it's something that does have to get looked at on a regular basis. It's not a set it and forget it type of an approach. It's as life happens and things change, you got to continue to update to make sure your wishes are being met. Absolutely. And it's covering all maybe new property, new things you own, make sure that's all being incorporated in there so you don't forget something that maybe has happened over the last year or so.
Not just new property, but also new members of your family. Like you can have a blended family. You never know what's going to happen there. You can have another kid. You should always be consistently reevaluating your estate plan.
Right. Yeah, I think about it, and I know we are, especially now, we're dealing with estate planning issues, and as people come to us and are asking us questions, doing it and having, like, if just like you said, Jacob, if you're having it, if you haven't had the discussion, you need to have it, and it encompasses everything, like you guys said. So I appreciate that. Okay, so that's the like, it encompasses everything. So that's what we think it is, right? And that's the broad picture. That's sort of the perfect answer. Alien came down. This is what we think, and the alien just happened to ask us, and we happen to work with estate plans or with estate planning all the time, right? That's one of the things that we work with. Okay, so now forget the alien. Let's talk about, that's what we just described it. In some form, each of us took a point and kind of described it. How would that definition, or what would be said if you asked what most people think estate planning is?
I honestly think my mother said this to me when I first started studying estate planning, and this, I think, encompasses pretty much what anybody thinks about estate planning, that it is fantasy land. It is only for the ultra wealthy that have like these mansions and houses and airplanes that they want to leave to people. They have these big successions, but like we established, it's not just for the ultra wealthy. It's more than just your money and more than just your property. It's also people you care about, what you want to happen to you. But I mean, some people just also think like, I don't need an estate plan. I don't really care about estate planning because they know what I want. My family will take care of it. I'll be good. They got my back. But that's not necessarily the case. So they don't really think of estate planning at all, or they just think it's for the ultra rich.
No, I agree. I had that same thought written down here in my mind, where most people think that it is for only the wealthy. But when it comes down to it, most people over the age of 18 own some type of property, a home, a car, they have assets, retirement accounts, investments, life insurance and annuities, like what we work with, at Ameritas. So you have those things, you have estate planning concerns to address, wills and trusts that you had mentioned. All of those are foundational elements that need to be addressed, not just for the wealthy. Yeah, the wealthy may have, the more wealthier you are, the more complex the concerns may be. But, it's not just for the uber wealthy. Everyone has estate planning concerns that may need to be looked at and addressed on a regular basis.
I want to ask my question just a little bit different, because because you guys both have said it's not just for the wealthy. I guess my question is why would the general public associate estate planning with the wealthy? Why that association that it's just for the wealthy?
So I'm assuming you're referring to the Tax Cuts and Jobs Act, specifically the gift and estate tax exemption. For those of you who don't know what that is, essentially when you die, how much money can you exempt from yourself?
Nice.
How much money can you exempt from taxes, essentially, from your estate? Right now, that exemption is at about, I think, $13.92 million.
Yeah, something like that.
Something close to that, 13 point.
For each individual.
For each individual, yes. So if you're married, you can do both. But that's a lot of money. And the average estate usually isn't $13, $14 million. Let's just round it to make an easy number.
28 million for a married couple. Now, that's definitely a lower amount of the population, say in the U.S.
Absolutely. And not just that, people think okay, well, we have the sunset coming up. The sunset essentially means that the Tax Cuts and Jobs Act is going to expire. Don't catch me on this, I promise. I will explain.
Yeah, you did a very good job of it. You were close to just going on past sunset and not explaining it, so you were close.
Sunset, we think we're clever in accountants and attorneys, so they've called it a sunset, but essentially it's an expiration date on the current tax law. And if that happens, we're essentially going to revert back to the old tax law, and the expectation is that the exemption is going to be cut in half to about $7 million, and even that is really high for the average estate. So most people just don't think it's in their wheelhouse.
Yeah, you hear that. I mean, that's been in the news, especially these last few years as we get closer to the sunset at the end of 2025. So most think, hey, well, I don't have this concern. But as we kind of addressed, wills and trusts and power of attorneys and beneficiary designations, all of that is estate planning. And that hits a lot more people that need to be addressing those and reviewing those on a regular basis.
And so if we think about Tax Cuts and Jobs Act and all those other things, and that encompasses a lot. So I know we've had conversations about what to expect. Sunset, right now, the sunset says, hey, if nothing happens by inaction, if nothing changes, it goes away. December 31st, 2025, or depending on how you look at it, January 1st of 2026, it goes away. So what's our sense of what happened with the election in November of 2024? What's the sense that you guys get in relation to what's going to happen?
So you've probably heard from one person or another, it's going to sunset, it's not going to sunset. The reality is we don't have a crystal ball. And with what's going on in this past November, we don't really know where it's going to go and what's going to happen. What we do know is the Congressional Budget Office, also known as the CBO, has come out. Oh, let me say, Congressional Budget Office is a part of Congress.
We need to get, seriously, we need to get a jar. We're just starting. I say a lot, so I can hear it. So I'm thoroughly pointing at myself, right? We need to get a jar for the jargon that we're almost always going to sort of talk about. If we bring something up, but we don't immediately explain it. That pause was long enough. I was getting ready.
I'm sorry.
Right, the CBO, the congressional, so if we get a jar, and the idea is that we're going to point out the jargon so that we make sure we can explain it to folks. We're going to let's let that sort of roll around for a little bit and see how we can do that. Okay. So.
Fair enough. I want a buzzer, though.
You want a buzzer?
Wrong.
Okay. No, okay. Well, I don't know about a buzzer, but But we're definitely going to get a jar. Like, let's just think about how we're going to do it.
Okay. Well, going back to the Congressional Budget Office, that's essentially just like a little, I almost consider it like a club of Congress. It's members of Congress that kind of spin off into, they specialize in this certain area. Here, they specialize in maintaining our budget and providing advice. They did come out and say, if we do extend the Tax Cuts and Jobs Act, it's going to cost us $4.6 trillion in the next 10 years. And that's going to increase the current national debt by $35 trillion or 13% if we let this continue to go. So really, I don't know what's going to happen. That's what they've come out and said, but they didn't really give advice one way or another.
So I think that with that just kind of drives the point home. Nobody knows what's going to happen, but the one thing that you can do is continue to have the conversations, be prepared, and continue to review what your plan looks like.
What's the saying? Plan for the worst and hope for the best.
Yeah, I definitely, I dig into it quite a bit. Quite a bit. I guess we all do, but the thought that someone can say, yeah, it's going to be this way or it's going to be that way. We definitely have to raise money for taxes, or we're definitely going to do. I can't begin to tell someone what's going to happen. And we have the advantage of being able to talk to some folks that are sort of in that world. They don't know and they can't tell us. So, like, the advice that I'm hearing here is look, if we continue to plan, if you continue to have the conversations, families are always going to fight, but I tell you, they fight a lot less when there's plans in place. Doesn't mean they're not going to fight, but we definitely need to have plans in place and having those conversations, and having those conversations and thinking about what you want to do, what kind of legacy you want to leave. All of that seems to work, regardless of what the situation is in Washington. All of those things seem to work better. And what we see, I think we can agree, what we see is when it's been thought about, not even well thought, but when it's been thought about, families end up fight. They continue to fight, but they fight a lot less.
Less drama, less family drama.
My estate planning professor always said we'd rather just blame it on the dead person, so we just put it off on them. They told us what they want, we'll blame it on them. Then you can't really have anybody to have a scapegoat at the end of the day when your family does fight.
Right. We've talked about estate planning. We talked about what we think it is, that it's much more expansive than people generally give it credit for. We think it's, people generally give it credit as being less expansive because we think it's for the ultra rich. So, where do you? There we go. There's my jar. So where do we really? Hold on. So since we don't really know where we're going, I think we established that. Where do you see? Just like an example of where estate planning can be used, and let's move away from, because we can do the $30 million client, like the $30 million client, the $40 million client, right? Can we have an example of what the average person may run into day to day?
Yeah, I guess I'll start with that one. And, the one that comes to mind that we talk about all the time on our team that, we discuss, and I'm going to try not to throw too much into the insurance jargon bucket here, but the one that comes to mind is estate equalization. And yep, I'm going to do the description now so I don't get hit with that insurance jargon. So what that is everyone, as we kind of already talked about, everyone owns property, assets, property, houses, cars. So the question that comes to mind with this is, as you're looking and putting your estate plan in place and determining what's going to happen to that stuff and who is it going to go to, beneficiaries, family members, organizations you care about, if you are worried about how you are going to fairly divide some of those assets up, and some of those things may be things that are hard to divide, they're illiquid, you can't cut a house in half, you can't cut a business in half. If you can't divide these assets fairly and equally, you may have an estate equalization concern to address.
So let's give an example of that. I'm going to run with what you said about the houses. So we have a house, right? Let's say we have 3 kids. One kid really loves this house. They want to keep this house. But the average person, most of their wealth is in their equity, in their home. The rest of their wealth is not going to even compare to that. So we leave the house to the one child. Well, what happens to the other 2? We all know we love our kids equally. So how do we make sure that we leave? Okay, well, I won't tell your kids.
We'll go fairly.
Okay. Equitably, not fairly. Okay. So we all want to make sure that we leave them what we think is fair or equitable in this situation. So what do? Well, we leave the house to the kid who wants it. What do we have left? Well, this is where life insurance steps in. You have this death benefit that can replace the value of the house that would have been split between the 2 of them. So let's say the house is worth $500K and you have a $750K estate. Well, you leave the kid $500K, the other 2 only have $250 to split. You'll just split the difference in the life insurance there and make sure they all end up with $500,000 at the end of the day.
To me, that's a perfect way. I mean, think of it as a scale. I mean, you have the house over here and then the rest of the assets here. That life insurance helps balance the scales so that way you have that fair, equitable inheritance between beneficiaries, which, to what both of you have mentioned, less family drama, less family fighting. There's more balance to the wishes of that individual.
And that's, when we think about estate planning, estate equalization is one of those things I know comes up quite a bit. We also, when we think about some of the other things that my estate is not going to it's not going to even approach anything that will require a large estate tax exemption, the need for a large estate tax exemption. Heck, it might not even be assuming it does sunset and drops from almost 14 million down to, I think we think like 7 million or something. We oftentimes run into those states that don't even approach that, and estate equalization is one of those concepts that you described very, very well. But it's one of those concepts that come up over and over and over again because they always have a house. There's always I shouldn't say always, but there's something like I think you described it best. It's a property that we can't cut it in half.
I mean, the ones that come to mind, rental properties, you have vacation homes, even
farms.
Family heirlooms.
Family
heirlooms. Farms
think of
are another one.
a collectible or antique car. You can't cut that right in half, and one person may want it more than the others. And how do you divide things up? There's a lot of different assets and property that could go into illiquid, hard to divide property.
And life insurance does a good job of filling in those gaps. We each said a little bit different. I talk about it. Do you treat them equally or do you treat them equitably, right? And treating them equally means I got to figure out a way to slice the house up. Yeah. I can treat them equitably, and now I can use life insurance or something to sort of balance the scales because somebody gets the house, somebody gets the business interest, or somebody gets the family farm, and so just sort of those sorts of things are estate planning concerns, even though they may not end up being, I need a large exemption number to pass my assets or the legacy that I want to pass to my to my kids, grandkids, whoever it may be.
Yeah, great way to think of it. I mean, do you want to have that person that truly values and wants whatever that object may be? Do you want to have them have to sell it so they can equalize and balance the scales, or do we bring in something else to help with that balancing? That way, you don't have to sell the farm, have to sell the rental property or the vacation home. Let's find another tool, another way to balance. And I'm trying to think of how you described it just a couple minutes ago that I liked how you mentioned it, but I can't think of it right now.
I don't remember what I said.
Equitably, not equally.
No, I can't remember what you said. It'll come to me. It'll come to me here in a little bit.
But this is just one of many, many ways and estate planning tools that you can use to achieve whatever goals you want to.
I mean, it's like we've talked about estate equalization. Liquidity is a huge one. Like I think we're here in the Midwest, and I grew up out east, so I knew nothing about farm and farmland or anything of that. But I know that it's one of those things that is cherished. You know, stuff stays in families for years and generations and generations and generations, and not having the liquidity is one of the reasons. You know, a farm or family property ends up being broken up because I've got to pay the tax bill, final expenses, whatever it may be.
And there's not a whole lot of extension on those things either. 'Cause here's another me not being the JD at the table. 9 months, right?
9 months.
9 months from date of death to cover if there is if there's an estate tax.
We're going to have to put double in the jar if whoever recites the first IRC code section. So
gonna be you.
No, I'm not doing it. Because I was getting ready to do it, and I was like, no, I'm not doing that.
But it's going to be you.
No,
I don't know that one.
not doing that one. So we'll try to avoid IRC code sections and do our best to keep the jargon down. So this is awesome. So I'm going to cut here, and then we're going to come back for part 2 of our estate planning conversation, where we're going to focus on business owners and how estate planning can be and has been and will be incorporated into that business owner market, the business owners out there that, like we said, still the same problem. If you're not thinking about estate planning and how it relates to your business, you probably should. So
I like it.
I'm excited.
Thanks for watching Future Focus, a financial strategist podcast. We'll look forward to seeing you next time.